Good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for January 6, 2022. Let's get right into it. So yesterday we looked at the critical state that was formed by the breaching of the PSAR and the extreme downward move. And yesterday we said we wanted to put a tight trading box around that as a critical state and be ready for a move in either direction. And so what we got was a move in both directions that ended up finishing right where it started or where it ended yesterday. And so the tight minimum manageable risk box, that's about a 50-cent or $1 box around the close. And so I'll be ready to go long on a breakout to the upside and short on a break to the downside, plus an extra position if it goes through the new 10-day low, another position if it breaks the belly of the dragon, another position if it breaks the belly of the RL10, another position if it breaks to a 5% sell-off, which is here. So if it breaks below there, so I'll be looking at piling on the short side if we keep getting these collapses. And I'm really looking all the way down here to the Z2 line at 451 on the case of a major meltdown. Hey, can it move that far? Well, here's how far it's moved on breakdowns before on one-day large directional moves. So there's this one. So could it move down? Yeah, it could move down at least to the -5, which is 5% off the swing high, which is here. And then there was this daily move like this one, which was even bigger. So yeah, if we just get another day like we've already seen in the last 30, the last time there was this there was a panic sell-off from this price level in the dragon, and it fell this far and it fell that fast. That looks like this. So it can certainly move that far in one day. So now a target of 451 is not out of the range of normal. That would be an unsurprising move. A break below 451 would be abnormal. And that's also a breakdown below the previous Z3 pinch. This was the last Z3 pinch that we had relatively. And so a price that violates, excuse me, that level would really be extraordinary. So anything below 450. And then that actually, this is where the Z3 line is right at about 448. So my point is that there is a non-zero chance of price moving like this tomorrow, which is why we're interested kind of in the downside. Now, the upside is easier to see and easier to believe in, I suppose, if you want to go long. Like if you have a bias for going long, then everything that I just said was just blah, blah, blah noise. Okay, whatever. Yeah, but I want to go long. What's going up? Well, yeah, okay. The upside argument is if it breaks out, then where am I interested? Well, I'm interested if it breaks above today's price level. That would be sign of new strength coming in. You don't see that until 471. All right. So that means the first place I can add another position would be here at 471. Then you have this frame of the dragon to contend with. And there's a lot of resistance in there. There's the bottom skin of the dragon. There is the RL 90 on the green line. There is the Z1 edge of the river at 474.5. There's the long-term fair value. That's where I could think about getting a third position, is if it breaks out of the dragon to the upside. So I would have like two. I'd be thinking about a double scoop going towards 476. then if and only if it breaks above that swing high, at 480, am I looking for, that a fourth position, if I can say it that way. Yeah. On its way to 490. So fear is more powerful than greed. And so the downside trade is the first one that I affirm. I mean, I want to go long, sure. Why do I want to go long? Well, because that would confirm this great big narrative that we're about ready to see here. So we're going to do some geometry. So that was the last belly of the RL10 reversal. And you can see inside that blue circle, what is it that you see? Well, the RL10 bottoms out, it crosses the baby dragon, enters the dragon, leaves the dragon, and then gets to spring all the way up here. What's happening in this space? Well, the same thing. What could happen here if this price holds and we get this upside move? Well, then we would end up seeing something like this channel being reinforced. That is the strength of this longer term bullish market, right? You'll notice that what is paralleling that? Roughly the slope of the dragon. If you were to, just take the midpoints of the dragon is showing you that strength of the upper trend, right? Well, let's now take a look at some of these other turning points. What do those look like? Something like the upper edge of this channel. And notice that it got stronger inside this move. So the more recent trend is actually getting stronger. So even though prices come down to the edge of this channel here around the Bollinger Band mean at about a 2.5% sell-off, that's just normal price movement into a critical state. And now the question is, what you going to do? Are you going to do this to the top, or are you going to do that to the bottom? This move is what takes it back to this support level. Now, if it fails through there, that's where on a longer term basis, you really want to start thinking about the next big move down, because the size of this move will be the size of the next move. Right. And this would take it down to about roughly 440. Right. Because we start looking at the size of these standard moves. Sorry about that. A little ugly. So that brings it down to about 440. So those turning points really matter. Well, why is that? Because when it holds support at these oversold conditions, when everybody that's long is fearful, the failure to fail gives you that tradable move. This is what the channeling and the overreaction signals are doing, is you're buying the dips in a rising channel. When those fail, they fail hard and sharp, right? So when you are in a critical state at the bottom of that channel, and you put a nice tight wrist box on that, like a minimum manageable wrist box, right? What you're betting on is that you're going to get this large stacked move of 1, 2, 3, 4, 5, 6. You'd love to see 6 boxes to the upside at the risk of one minimum manageable risk box. And if that fails, then you're thinking about, well, I can get 1, 2, 3, 4, 5 to the downside. That makes this critical state perfect for traders with the short-term orientation, where you can get a minimum manageable risk box with a larger than normal move in either direction that's not hard to believe in and which simply follows price. So why would you have a directional bias at all? A directional bias makes it easy to enter on one side because you believe in it, but makes it harder to scratch that trade if it suddenly starts working against you. So it makes it easier in one direction, but then harder to get out. And it makes it harder to take the trade in the other side because you're leaning towards one side. So just be balanced, be unplanned as far as which direction it goes, but be well prepared for either direction with your manageable risk box and then ruthless risk management to execute your trades. So what I've tried to show in this one is that we are at a critical state, ready for a large move in either direction, in exactly the same way that we were in a critical state here and in a critical state here, and now we're in a critical state here. It's ready to go large in this direction and large in that direction. And I say large, it's not even really large. That's only another 2%, 2.5%. That's not even an extreme move, but it would be significant. It's large relative to the size of the risk box that we can manage. So that's what I mean about trade architecture. One of the things that may help you get out of your directional bias would be the mental imagery of rotating this view. Instead of thinking of it as up and down from a critical state, think of this, let's rotate this thing 90 degrees. And now what if this was the center line of a road and there was a big old truck coming at you, and the only way that you get crushed is if you don't move one side or the other. Does it matter which way you move to get out of the direction of this truck that's going to crush you? No. So just be prepared, pick one and go. So maybe this is up and maybe that's down. It's the lateral move that matters. And then it's going to go as far as it goes, and then it rushes to get back on the road after the truck has gone by. So don't stay in the middle of the road. Or maybe that's a train if that's easier. Don't get crushed. Don't get crushed on a train. You know where the train's going. It's the train tracks. It's the Bollinger Band mean, or it's that critical state. So all we're really doing is putting a tight risk box around that rascal. And we're going to say, which way is the frog going to jump? I don't know, but I'll get long and follow it and then trail it with my stop as I go, or I'll get short and follow it with managed exits, managing my stop, and I'm going to make the move out of the critical state. Try thinking about it that way. Does that make it easier to have a non-directional bias? So instead of being in here thinking, oh, this is going to go up, so I'm going to really go up. Then if it starts to fail, you say, no, I believed it was going to go up. And then you don't stop and reverse and then get the big move to the downside. Think about that. That little 90-degree rotation may actually be a very useful mental model for helping you get over your directional bias. There it is. Which direction do I want to go? Left or right? Out of my critical state. So just something to think about. Let me know in the chat if you found that helpful. All right, let's take a look now at the sectors. So we had the S&P was basically flat for the day, 0.09. So you might look at that and say, oh, well, nothing happened. Hey, something happened today. It made a significant move in either direction and then ended up right where it started. That's not nothing. That is something. It says that there was an active interest in trading in both directions, which means that traders are activated now that they're back from the holidays, get all that turkey to work off, and now they're ready to go in either direction. So the moves are going to be larger, not smaller. Be ready for that. But don't be locked into a directional bias quite yet. The only longer term bias I have is kind of on the long side, where that longer term trend is evidenced by the RL270 and the slope of the dragon is generally bullish normal. But we just happen to be in a tactical critical state. So the S&P was basically flat at 0.09. The Qs flat at 0.07. Treasury slightly better at a quarter, up a quarter. Emerging markets up a half. And the Russell up 0.6 for the strongest speculative energy. So if tomorrow the S&P actually starts working to the long side, then that means that the channeling system is working. And then you would not be surprised if the Russell was even better, in which case tomorrow you would want the Russell because that already had extra juice today. And then it would be reinforcing that juice tomorrow, supported now by an improving psychology in the S&P. So the Russell should be on your short list. The Dow was not as good. It was the worst performer today at minus 0.47. All right, let's take a look at the other sectors that did better than the S&P. So we had XBI, the S&P bios. You had Mexico and lumber. You had VIX and Tex, the steel company. You had the FANGs at 0.6. Blended commodities at 0.9. Brazil, crypto large cap, commercial real estate. Oh, look, there's finance, marijuana, energy, oil, oil exploration at 3%, and debit energy at 3.8. Debit energy, the strongest mover today in our stack at 3.78. PayPal, 2.8. John Deere continues another strong day, 1.16. Square, 0.8. TX, the steel company, 0.56. What were the sectors that underperformed? Agriculture, minus 0.1. Consumer discretionary, 0.6. The other lumber, 0.27. Discretion or staples, 0.27. Lithium, minus a half. Tech had another underperforming day at 0.5. ARC Innovation, blockchain. Materials now started giving back. So energy and finance were up from our little triumvirate. But then materials underperformed a little bit. Bitcoin futures, clean energy, Archgenomics, 1.5. The Bitcoin Trust moonshots, 1 and 1.7. And now the cluster, let's see, Wheaton and Ethereum off 4.5. Now the cluster of underperformers, including our steels, which were, I mean, that's what you want in an intraday trader. So you had Robinhood off 2.5, Virgin Galactic, Tesla down to 1064, off another 2%. Cliff and US Steel, 2%. That's what you want in an intraday trader, is a large percentage of moves intraday. So decisive moves, those are what's tradable. You want the volatility in the short term. Apple and Microsoft both underperforming today. So in my view, the upside has two logical groups of leadership potential tomorrow. If the S&P is up, it could be because energy and finance are continuing to be strong and continuing to lead the way. Or it may be that technology, after moments of weakness, now starts adding strength. And so either one of those could be the horses that pull this thing north tomorrow. What could lead it south tomorrow? Well, more of the same. Hey, if energy and finance did not provide leadership and technology continues to weaken without anything pulling it north, then everything could collapse. So that would be the scenario in which everything goes down tomorrow. So that makes tomorrow an interesting critical state. Excuse me. All right. Here's another exercise. So let's see in the Russell what is happening in each of these blue circles. Let's see if we can see. Let's learn to see. All right, so in this blue circle, we have the PSAR flip. And then in this blue circle, the RL10 crosses the dragon. So we have the RLXD, and that gets followed by this move to the upside. So those signals give you early warning of what might be a good move. Now, notice at the top, this thing now, the RL10 rolls over after flirting with the Z3 the whole way up. Then it can't make a new high. And then you get the RL10 crossing the baby dragon, entering the dragon and the P1 in this blue circle. You now have the RL10 changing to fall and crossing the VWAP, and then that triggers this big old move. That's why the crossing of the VWAP is so darn significant. We're going to see that again over here, where you then get this trigger. So the VWAP often acts as a pivot point for these kinds of moves. All right, let's continue down the stack. So now notice that you've got that nice orderly PSAR move all the way down. Don't get chased out of positions just because you're getting normal noise and retracements. Set your mark at the PSAR for the risk box and leave it alone. Let the move happen. All right, here, I should have probably added another circle and said, look, in here, we now have price crossing the Bollinger Band mean. Here, the RL10 briefly reverses and then fails again right away. That's like collapsing dragon. That's the one you want because it hardly even budged the needle and the RL10 turned to winter. And then that's making this support level collapse. And now that opens up the move to the bottom. This one is crucial. When price crosses the VWAP and starts pulling away, that's a signal. Here, the RL10 is now crossing the RL270. It has another one of those little brief pauses with the collapsing dragon, then resumes another leg down. And now in these two, it cannot make a new low. And what I probably should have had was, turns to spring, crosses the Bollinger Band mean, leaves the river, and now turns to summer, crosses the VWAP briefly, falls back through, does not fail further, crosses the VWAP again, and then off we go. Here's one that was failure to fail further and held support at the VWAP. What I want to show here in these blue circles is the move that didn't happen. Instead of coming down to test the Bollinger Band mean and then the bottom of the river and then the RL270, it failed to fail further and instead took off and resumed. So failure to fail is information. And then you have another COTA 2 and an RLXD and another one RLXD. So all things good. A couple other things I want to look at now. Some architecture issues, right? So from the peak of the RL10, the stretch back to the RL270, this is the RLFF. How far up were they able to stretch the RL10 away from the RL270? Well, they were able to move it that far. So this blue, this blue arrow here, that's how far to the north they're able to stretch it. Well, so a move back to the RL270 is not unreasonable. And then you say, how far below could it stretch? Another leg. So it comes down to here. And then you bring this one over and you say, well, that's a move to what was Z3 at the time. And look where this thing gets to, where it holds. Notice the symmetry of the RL10s compared to the RL270. That is the regression line fractal framework. Notice how far the RL10 stretched away from the VWAP in this case. It moved this far. So how far could it move again? Well, let's say it could get back to the VWAP after it fails to fail further. Yes, it did. How far beyond the VWAP could it get? It could get another one of those. So let's go to the VWAP and stack that north and then move across and say, oh, look, how far up did it finally get on this move? Precisely to the stretch that we're entitled to believe in just based on the previous price action. So volatility is symmetrical with respect to these measures of fair value, whether it's the VWAP or it's the RL270. And you can use that to project the size of reasonable moves whenever you identify key turning points. Where are those key turning points? Here's one. When it gets to that peak RL10 and can't serve up any further, when it crosses the fair value on the way down, That's not really a turning point. That's just a way station. Here's the next big turning point when it got to that extension to the downside and couldn't go any further. And then a return to the previous fair value. Notice that it takes only one kind of big leg, one big move on the downside, but it takes two, one, and then two to make that leg. So the upside move often is more difficult to believe in. So why do I love the collapsing dragon? Because when it breaks and fails, it all goes right now together, fear, and that makes the move happen faster. So if I have a short side position and it doesn't collapse immediately, failure to fail is information. So the short positions coming out of critical states are my preference. That's the one I want to see. So I don't mind taking these SSCs, because if that had not gone up, then the downside would have been the size of this move as leg one. That would have been a move to the downside. And then I can project that move as the likely downside move. All right. So that's using the regression line fractal framework and these different checkpoints in the movement of price through the RLCO framework. Okay. Let me know in chat if you found that helpful. If you didn't find that helpful, let me know why, because there's something important missing. All right, let me, I want to go through the daily report for those that are, looking to get prepped for tomorrow, and then I'll cover the charts of interest. All right, we've already, so let's go to dashboard one. So we're still in bullish normal. We're now oversold on the 10 and the 2. The risk Z is still giving us favorable notions for upside swings, but we're at the point where the risk Z is rolling over, and then that would warn us about upside moves. That warns us about the potential for rising volatility and a downside short-term move. So that sounds like a critical state to me. At the same time, we're seeing the S&P and the Qs hitting these reliable buy on dip signals and channeling an overreaction. That's all I need to see to make the argument for the upside recovery. I don't need any other information other than that to know that the upside is about a 0.6 to 0.8 reliability of a move back to the previous 10-day high. So I don't even need to have a reason beyond that. The fact that those systems are signaling is reason enough. But I can also read the map and see the potential for the downside. So that's what makes this a critical state. The only doji today was in Pfizer, starting to see a few more auto framer candidates. Yesterday's little setup in Cisco paid off with a 1.5% upside move. Nice. The ETFs are showing more dojis and even more auto framers. I really like today's patterns in 551W. These are ones that had white candles and recovery moves. So while the market was flat or slightly off, these are the ones that had upside moves. So technology had a white candle. The S&P had a white candle, so slightly higher close than the open. That is a slight leaning to the upside. The Russell mid caps and the small caps. So what that means is all of those US indexes had strong recoveries in the afternoon to let them close slightly higher than they opened. So even though they were off fractionally in the S&P and the tech, the Russell was up, and there is a forward lean into those indexes. So the upside move is certainly there. Only a couple squeezes today on the increasing volatility, oil, travelers, and Pfizer. We're starting to see more symbols moving into the fall now that they've rolled over and showing weakness, but still being dominated by the summer. The only ones in the winter, and this is of note, treasuries in Brazil, because Brazil's been so weak. Amazon and Nike. ExxonMobil, Cat, and Devon having the strength. That's energy and industrials. Should probably include Chevron in that. Finance and energy strong today. Only materials from yesterday's winners couldn't hang today. So I'd be looking here for finance and energy as the easiest leadership to believe in tomorrow. There's your critical state, ready to go large to the upside or large to the downside. With some rising volatility. Poised right at support levels here in the middle of all this congestion. Again, that sets the stage for a large move back to the upside or back to the downside. Critical state ready to go. That's what a critical state looks like right there. All right. That's everything I got from those daily reports. Let's take a quick look at the traders' charts of interest. I think this is Mark's. What he was looking for were breakdowns out of Z3 pinches. Notice when those things break, the downside happens large. You get some congestion, then the breakdowns happen large. Bang. Congestion, question mark, which way is it going to go? Collapse. Question mark, which way is it going to go? Collapse. That's what the feel of a collapsing dragon is. Same thing in the semis. Congestion, collapse. Congestion, collapse. Congestion, collapse. Downside moves are the sharper ones. When he applies that into a trading practice, now he's looking at these symbols in here. Oil and gas exploration. Is it going to collapse further like it just did, or is it going to rebound? Notice the winter turns to spring. It bottoms out. There's the PSAR flip. There's your move. Harsh winter, extreme move and an extreme stretch. PSAR flip turns to spring. 1, 2, and there's your CATA 2. There's your SSC. Here's your collapsing dragon. Here's a second one. Bottoms out, PSAR flip, winter turns to spring. You try to buy inside here. You use either the bottom of the dragon or the bottom of the PSAR as the move, and then there's your move. Devon Energy, there's a lot of trading in here. It's positive expectancy, but this is just getting some stick time, as we might say. So here's your gap, a reasonable effort to the upside, good coverage, avoids the rest of this painful selling, but the failure to fail further is now information. So I'd like to see you get long inside here. Look, the PSAR never even flinched. Get long here instead of there. And now this move pays off, and then this would pay an R. And then when this crosses the VWAP when it rolls over and can't go further, this is where you can get short when it crosses the VWAP. Notice the next time it crosses the VWAP is way over here. So you get that long move. That gives you leg 1 and leg 2. So instead of trying this one, you got the downward sloping VWAP. Stay with the trend. And now here is your support at yesterday's close and at the RL270. Fails to fail further. There's your coverage of the short, and then there's your SSC, which you could have gotten even a little earlier. Could have added a second position here when it crosses the VWAP in an up move. So this was a little late. And then if you can get your second position here, then this one pays off, and then that's a brilliant trade. Now this one, failure to fail further, it does not even get down to the rising 270. Then that is your SSC instead of here. That means this trade pays off instead of that one losing. And then this is your re-entry. It failed to fail down to the VWAP. Instead, it moves up, and you caught that trade. So that's a good one. Reasonable effort on the short side, reasonable scratch. You stay out of Crocodile River. It comes down to the edge. This is a reasonable short. It doesn't fail further. Great scratch. Failed to fail further. You could now think of this one on the long side to get back to the 270. That's pretty good. I'd like to see you scratch, but even so, minus 0.4 is not bad. A great re-entry, and you get paid inside here. So lots of good learning. Don't have a directional bias. Good work. So here's what 14.5 R looks like. Z3 pinch, collapse from spring to winter, gets short with a tight wrist box at the PSAR, breaks out of the Z3 pinch, adds every 2R, fourth position. That's plenty. Because now that fifth one, the loss on this one negates that one. So you'd have been better off just having 3 instead of hurrying up further. But now what I want you to see is out of this abnormal pinch comes the abnormally large move. There's your harsh winter. There is your failure to fail further. There is your SSC. Notice the turning point on that beautiful purple dragon, baby dragon. That's a 1, 2, 3 entry, or that's an SSC. And then there's your SSC trade with a nice exit here. Reasonable effort on the downside because we had a high and a lower high, and it's starting to fail. And then that's a great scratch. Perfect. Now, what I want you to notice is that this is the 5-minute chart. Notice how this thing is fractal in nature. This entire move of 15R happened inside this little box. And if there's 15R inside that move, it begs the question that once this rolled over and fell through the dragon, and now you have this move all the way from fall into the winter, how many R is available in those directional moves if a move of this size allows you to find 15R? And oh, by the way, a high, a lower high, a lower high, a lower low, failure to fail further, winter turns to spring, turns to summer, caught a 2, caught it too, with some opportunities to capture the excessive gains. If that move was 15R, how much was available here and how much was available there? All of the heavenly glory waiting to be discovered. But this is what a critical state on a daily looks like, and when you might adopt a potential long side orientation because you don't know which way it's going to come out. That's what's forming right here. Is it going to be one of these now that this support level has been broken? Or is it going to find support here and then start working its way back to the RL270, the Bollinger Band mean, the far side of the river, floodplain, and Z3? That's what your price ladder on the top side looks like. But I would tell you, if when you come back over here, if this price level is violated tomorrow, down it goes. Down goes Fraser. This is finding the mover in Devon Energy. There was that tight box from yesterday. Here's the gap up, a reasonable effort to go because it gapped up, sold off briefly, and then crossed the VWAP. Great shot. Great 1R loss. PSAR flip. That's where you get short. And then you cover in the same place that you stop and reverse and get your long side trade. And if this was 2.5 from here to here, then it was 2.5 from there to there. Now this Kata 2 is a little bit late getting in because it finds support at the Bollinger Band mean, crosses the dragon. We might have gotten long here. Then this pays off a little bit. When this fails to fail down to the VWAP, instead it resumes. There's your Kata 2. You'll get paid here to the PSAR flip. Good effort. And so this one earned probably 2R today. There was probably 5 to 6 available, but that's good work, finding the movers. And you can see that over here, he's looking at how strong XLE was on his stack. And then inside XLE, using the TC2000 bundle, he finds that inside his little logic chain of energy companies, Devon Energy was the best one. So that's why he's in Devon. That's the use of the logic chain in real time. Nicely done. Here's Joe with the S&P. Consolidation, fails to recover, collapse, lower high, collapse, perfect entry. As soon as it couldn't make a new high and starts rejecting, as soon as it crosses through the dragon, he's short. And that's a pretty good capture. That moved pretty fast. That's about a 1, 2, 3. What I really like is the stop and reverse shortly thereafter with a nice wrist box. You gave it 2 chances to go higher. It didn't, so you cut it. Now, here's the one I want to coach you on. Now, this one is a reasonable. It really couldn't make a new high and rolled over, so you get short because it's testing the VWAP. And if that collapses, it's going to come down to here. So for a tight risk box, you're getting a 2-to-1 reward to risk. Now, when this fails to fail and you get the PSAR flip and it turns to summer, cut that one right there. So instead of losing 1, you only lose half. And now instead of getting long here for a scratch, you get long here for a 1R win. This is a nice short. This was a Z3 pinch breakout, which would pay off. This is a great short. Here's another collapsing dragon. But again, we're getting close to the last half hour. So I'm glad that you don't take that trade. That's very good work. Daily total, 6.2R. His running total is now 18.7. It's getting it done. Ruthless risk management. Keep taking the next shot. Aussie. Oi, oi, oi. There's 14R. There's the whoops, sorry. There's the Z3 pinch. Collapse at the open. It collapses through the VWAP. It fails to go higher. There's your collapsing dragon. Now, stop that. Collect this. You had a 4R win that got frittered away because of the overly tight stops. Those stops are not even getting through the dragon. Loosen up, Francis. I like this, that he notices the Z. So let's stop doing this crap. Now here's the Z3 breakout box. Good short, good capture. This one might have gone a little bit quicker here. And then instead of a scratch, we might have gotten paid. This was a great effort. Now, when that fails to resume and this breaks down here, let's get short in here instead of here, although that's pretty good. Good second position. Now you're learning. Let it run. Use the Z1. Fewer trades. You stay in line with the move especially in the currencies. Once those things start running, $14R pays for a lot of scratches, really nice work. Evidence of learning intraday. That was well done. This is the daily biotech 3 times. So here's, oops, how did I do that? Sorry. Here's the consolidation, dragon. Now notice that your urge to get these extra positions in causes what should have been a 2.5 or 3R trade to come back to 1. And now harsh winter becomes spring, RLXD, PSAR flip. There's your SSC. Now a lower high, there's your collapsing dragon. Then get paid here instead of losing on that one. Snug that right up into the dragon. When it turns to the winter and breaks down, crush that entry right there. You could even get short again here because now you have a high and a lower high, and it crosses the dragon again, get short again. And this might come down to here. Still positive expectancy, but we want to get more out of it than that. I've already forgotten about your 14R on the other one. This is Luke in the Aussie on the 5 minutes, Z3 pinch. There's that noise box. It breaks down out of Z2, gets it, crunch. Good effort. Great reentry, gets paid. Fails to follow through, so we just get short again, cover. Look how nice and orderly one entry and nice and easily managed that is. Good effort to re-enter, good effort to re-enter, keeps firing. 7R. Easy, like falling off a log. S&P on, this is the 1 minute. Yep, okay. It peaks up here at the edge of the floodplain, crosses the Bollinger Band mean, beautiful short, Nice risk box should be about here. I would accept it at the PSAR. 1, 2, and cover. That's good practice. It's better if that was a 5-minute, but I don't mind getting paid. I'd like to see you get short a little bit sooner. That's a good scratch. This is an effort to get like an SSC. I'd like to see you get it here or here instead of waiting to get all the way up into here. Then when this fails, you probably could scratch that. Instead of losing a full R, you might only take a half an R loss or a scratch. And then this becomes a short instead of this one, because now you're already conditioned and you're back to the zero state. You could even get short in here. And let's say you get short here. Now you're going to get paid. And here is your 1, 2. And so instead of a 0.1, that would probably be a full 1R. And then here's your SSC on the long side. S&P on 3 minutes. Oh, gosh. What did we say yesterday about that price level? Oh, when that breaks. We said when it broke below there, oh, there's your short. Oh, gosh. Still, nice collapsing dragon short. Now you get to here and you let this come all the way back, so it's only 0.4. I want to get paid better, but I want you to get this. That was set up from the daily. Reasonable stop and reverse. You got paid. That's good. This was a good effort at another COTA 2. Good exit. Way to stay out of the river. On this Z3 pinch, I might have tried this one on the long side, and then on the PSAR flip, exited here and gone short again. So some opportunities. So really good work today, guys, across the board. Nicely done. A little bit longer than normal, but lots of good lessons today. All right, that's everything I got for us. Let's get ready for tomorrow, and shall see you in the room.